Good afternoon, traders. I'm Melissa, a trader here in the trendy trading room at Simpler Trading, and I'm excited to walk you through how I use the Fibonacci Golden Pocket to buy the dip. I have been using this method and have found great success using a combination of Fibonacci levels as well as supply and demand levels to buy the dip. And I'm going to share some live charts with you on trades that I've taken. Also, take a look at some others that set up for a dip buy in the golden pocket. So, I'm going to turn my camera off here for a while. You saw my face, and I just want you to focus on the content. So, thanks for joining me, and I hope that you will find this content valuable. So let's get started. First off, let's talk about what is the golden pocket. The golden pocket for me is the 60 to the 50 to the 618 level using a Fibonacci retracement tool. This range is often referred to as the golden ratio, and it's commonly respected in both bullish and bearish trending markets. Now, why the golden pocket works. The reason the golden pocket works is because it's where institutions and smart money often look to enter trades. This makes it a magnet for price action during retracements or during pullbacks in a bullish market like we are currently in. It provides a low risk entry because the zone is often not that wide. So it does limit my risk. Now, let's talk about how I set my charts up and how I use alerts on toss to alert me when price has retraced to the golden pocket. I start by identifying the recent swing low to swing high. I then draw my retracement levels and focus on the 50 to the 618 zone. That's my golden pocket. I always set alerts here to prepare, and especially if I have a demand zone or a supply zone in the same area. Here's the steps that I take for buying the dip in the golden pocket. I don't just blindly buy the golden pocket, I wait for confirmation. I like to enter on reversal confirmation like higher lows on smaller time frame charts and use other indicators within the zone to signal the reversal. A couple of my go-to indicators are the trendy turn signals and then JC's new monster Momo indicator. I have been testing that out inside of the golden pocket, and it is working very well to give me that confirmation that I'm not catching a falling knife. Let's look at some live chart examples here real quick. Let me remove my presentation and then pull up Thinkorswim, and we'll look at some live charts together. The first one I want to highlight is a trade that in the trendy room we are currently in. It's Big Bear AI. BBAI is the ticker. And this has been a great trade for us. I think today it's up about 200%, but I'm going to show you, and I have the golden pocket drawn here. You remember I said it has low risk? What I mean is this zone that we bought the dip on was only about 25 cents wide. Now, I measured from this uptrend, and at the time that we bought the dip, the high was here. So I measured from the swing low to the swing high, identified the golden pocket, a trendy indicator, the yearly edge, the blue line on the chart here, was right in that golden pocket. And I told my trendy family that, hey, this is a buy the dip moment for me on BBAI. Price pulled back to the golden pocket. I have a trendy indicator right inside of the golden pocket, and on smaller time frame charts, we began making higher lows. So we entered the trade in the golden pocket. I have trimmed at levels that I gave the trendy room ahead of time. As a matter of fact, our next trim is up here near $8.38 and targeting basically $10 to $13 there. But like I said, currently the position is up about 200%. And I really want to see this $7.30 hold as support today because that was the top of the golden pocket of the bear trend measuring down. So I want price to get above that 618 and then hold it as support. So that's one example of a trade we're currently in. Rocket Lab was a trade that we actually just started yesterday, I believe. And it was also a golden pocket pullback buy. Now, this one is not up 200%, but it is still doing really well. So, the range that I measured to find this golden pocket was on this big explosive candle here, yet a few days ago. On that big explosive candle, I identified the golden pocket here, and when we pulled back into that golden pocket yesterday, I went to a smaller time frame, waited for us to start making higher lows, and also got some trendy turn signal. And the Momo indicator was giving me confirmation that the momentum was shifting from the downside back to bullish. And so I got the trade executed here in the golden pocket. And then today I've been able to take a trim at this 35.75 level and now have a break even stop on the trade looking for 36.51 and 37.73 for the remainder of the position. So here was another opportunity to buy the dip. And on smaller time frames, and I'll show you right quick, we also had demand here. So on a 4-hour chart, we had the inside and up candle formation that I, as a supply and demand trader, like to use for buying the dip. So not only was it the golden pocket, but we also had demand there. And then on smaller time frames, I waited for confirmation to get fully allocated on this position using the trendy turn signals, higher lows, and the new monster Momo indicator. So that's another example of a trade that we are currently in that we use the golden pocket to get in this trade. Another example I'll show you is Hood. Hood has been absolutely on fire. I did not get into this trade because I have quite a few open swing trades on right now. So, unfortunately, this was not one of them that I entered, but I want to show you the beautiful, beautiful bounce yesterday when the market in Q pulled back, Hood pulled back with it, and we got a entry or a opportunity to enter in the golden pocket here of this recent rally right here. Came right into the golden pocket and actually today has made new all-time highs. So, beautiful example of looking at a stock that is very bullish, taking a look at where the golden pocket is at and buying that 50 to 618 Fibonacci retracement there. So, like I said, I didn't take this trade, but it was another great example of how looking for golden pocket pullback buys can produce nice profits. Another name that's been really hot, making new all time highs day after day, is Broadcom. And I will show you an example on Broadcom where I believe the pullback occurred yesterday as well. And how, if you look at the up move here, I measured from where this candle closed on the 23rd of June because we got a gap up and then continuation move up. So I measured this move here to identify the golden pocket. Yesterday, price pulled right back into the golden pocket. We also had the EMA cloud here, nice bounce right off the 9 EMA on the daily chart. And you can see another great profitable trade here in Broadcom buying that golden pocket, also a 4-hour demand zone as well. So, another nice, beautiful trade. Notice that the names that I have been giving you to buy the dip at the golden pocket are stocks that are in bullish trends. That's very important. I like to use this method to buy the dip when a stock is in a bullish trend. I find that when a stock is just chopping or consolidating, it's not as reliable. But here's another example of how small the risk was on this golden pocket. It is less than $3 of risk, and it's already paid a $6 reward. So a 2-for-1 risk to reward using the golden pocket here on Broadcom. Now, another name that has it's bullish or it's bearish, and it's wild, and that's Tesla. Tesla has a mind of its own, and it's definitely very affected by the news. Here's an example of a Tesla trade that paid very, very well. I am not still in the trade. I was actually stopped out at break even on my runner right back here yesterday when it pulled back. But I want to show you why I bought the dip when Trump and Musk were having their Twitter or X, whatever you want to call it, war. We bought this golden pocket here, which is also a demand zone. But measuring from this nice uptrend that was, right? The tweet war brought price right into this golden pocket as well as a demand zone. And I bought the dip here and got my down to just one contract on this move up to supply. And like I said, I'm not still in the trade, but notice that yesterday's big down move in Tesla brought price right back to the golden pocket here. And again, very nice bounce from the golden pocket. So, those are some live examples of how I use the golden pocket to buy the dip. So now I'm going to go back to the slideshow and talk about some rules that I have for trading the golden pocket. Number one, I need for a stock, if I'm buying a dip into the golden pocket, I want the stock at the time to be in an uptrend. I need clear swing potential of continuation. I don't want to force trades if a stock is just chopping around. Rather, I want it to be in a strong uptrend. I also wait for confirmation. That keeps me, you've heard the saying of catching falling knives. Well, waiting for confirmation helps me to not catch the falling knives. And always use a tight stop loss below the golden pocket. Now, I trade with a risk amount that I am comfortable with, meaning the amount that I allocate per trade. If the value of my options were to go to zero for some reason, it would not wreck my account. I'm not risking 50% of my account or more, not nowhere even close on any one trade. So I do commit to candle closes. If I'm trading off of a daily chart, for instance, I don't get wicked out below the golden pocket. But if a daily candle closes below the golden pocket, then I take my stop loss. And once again, the I've been using this dip buying method for the last probably 2.5 years as part of my strategy, and along with, of course, buying the dip in demand zones. But the times that I have been stopped out, a vast majority of those losses came when I was trying to use Fibonacci to buy the dip at the golden pocket in a name that was just in its consolidation phase. So, discipline is everything for me. I follow these few simple rules of never forcing a setup, always waiting for a confirmation signal, and I protect my capital with a stop below the golden pocket. And that is how I've been able to find success. So I hope that this all makes sense for you. I don't know if you have any questions, or maybe you have a ticker that you would like to look at. Yeah, Miles, some people use the 618 and the 65. I use the 50 percent retrace to the 618. That's what I call my golden pocket, because a lot of times big money is waiting on that 50% retrace. And what I found was that many times, like in the example of uh, which one was it? Hood, I believe. It only retraced to the 50, and then we had that big, huge bounce. I'll show you again. So I've studied this a couple of different ways, right? And I found that we would often get big moves before price came actually to the 618. So now I use the 50 to the 618, and that's what I call the golden pocket for me to buy the dip. No, I am not in the AVGO trade, Javon, and today it has moved well off of that golden pocket. We can take a look. It's always, always, always good to know your plan before price gets there, right? So if AVGO was on your watch list, what I would suggest you do, and we will draw a new golden pocket because, okay, well, I guess it wouldn't change. We haven't made a new all time high. But run fibs, right? And like I said, I'm starting because this was a big gap up, and then we came up and made a new all-time high. So I'm going to run my fibs from where it closed before the gap up to the high, identify the golden pocket, right? And then what I would do is create an alert here. At or below because price would need to pull back. And then in the note, I'm going to write golden pocket. Okay. Great question, Donald. We'll look at AVGO as an example if you want. So when this alert goes off, I will know that Broadcom has pulled back into the golden pocket again, but notice it has been tested now, right? Any zone, whether it's a demand zone or a voodoo line or a Fibonacci zone or what have you, the more times they're tested, the higher the probability is that they could break on the next test. So I just got to point that out to keep you informed. But I have an alert there. So let's say that my alert had went off. I'm going to go down and I'm first going to start with if I'm trading or get looking to get in based on a daily chart. That means I'm going to be buying probably 4 weeks out to expiration, 2 to 4 weeks, depending on how the market is looking. But where the market's at right now, I would buy extra time. So I would be looking to buy 4 weeks out to expiration. That's number one. Number two is hold on one second. Sorry. If I am watching a golden pocket on a daily time frame, I'm going to look for confirmation on a 2-hour chart. Okay. All right. So looking at this 2-hour chart, I found the golden pocket on the daily chart, but I'm going to come down to a 2-hour chart. You could even use a 1-hour chart, depending on how aggressive you want to be. But the smaller the time frame that you're looking at, the more aggressive, the confirmation would be. Sorry, I'm having a coughing fit here. But, you can see we made this low here, and then when we came back to test it, we did not make a lower low, alright? So, also you got a trendy turn signal. That's this yellow arrow right here. That is another confirmation for me. And if you own the Monster Momo, you could throw those on there as well. If I were using the Monster Momo, I would use a 30-minute chart for this daily time frame golden pocket dip buy. I would use a 30-minute Momo. But sometimes if I'm feeling aggressive and the market really has room to run, So on yesterday, this candle here would have been an entry or this 30-minute turn signal. So if I found the zone on a daily chart, I'm going to look at the 2 hour if I'm being conservative or a 30-minute time frame if I'm being aggressive. The Rocket Lab trade from yesterday was on a 2 hour chart. And I'll show you that real quick. It was on a 2 hour chart, and I was using 15-minute higher lows. Okay. So what I did was on the 15-minute, when I got the alert that it was in the golden pocket, I waited for a 15-minute candle to start making higher lows. All right. So right here is where we reclaimed the golden pocket. And then we made higher lows in here. And that's where I went ahead and entered full allocation on the trade. And of course, have trimmed now. So if I'm trading off of a 4 hour zone time frame, then I will use either a 30-minute or a 15-minute confirmation. More aggressive is 15-minute. More conservative would be the 30-minute or 1 hour confirmation that I'm not catching a falling knife. All right. Javon asks, does price have to close in the golden pocket? No, Javon, once my alert goes off, so we set one on AVGO, right? Once that alert goes off and it was on a daily time frame chart, right? Once the alert goes off, then I start watching for the confirmation. So once this alert goes off, I will look at this daily. I will see price back into the golden pocket. Then I will go to the smaller time frame chart. I will put an alert at the current low. And if that alert goes off, I write a note lower low. So I know there's nothing for me to do. If the next candle makes a lower low, then I don't do anything. I look at the in 2 more hours or whatever smaller time frame you've went down to. Wait and look and see if that next candle then makes a higher low, or that next candle we get a trendy turn signal on it. Okay. Sandu asks, what is the best exit strategy on swing trading? For me, and this is just me, but I like to scale into trades and scale out of trades. So for me, I'm going to use a combination of Fibonacci levels as well as trendy edges. And then my ultimate target is almost always going to be supply zones. All right. So on my Rocket Lab trade, I scaled out of the position at a Fibonacci level, which is the 38.2. This was a scale out. So I'm still in half of my trade, half of my position, and I will scale at the 618 here. Scale out half, however many contracts I have remaining, I will scale out half. After that, for a third target or above, I'm going to stay in the trade as long as momentum continues to the upside, as long as my break even stop isn't hit. So I scale in, I scale out, and I use a combination of Fibonacci levels to scale out as well as trendy edges. And of course, right up here is the supply zone on this name, Rocket Lab. So this zone right here is the ultimate target on the 4-hour chart for Rocket Lab. So if price makes it up to my final target, then I like to set a trailing stop and or stay in the trade as long as the EMA cloud price remains above it. Those are some ways that I stay in. All right, guys, that wraps up my time. I hope that you found this content valuable. I encourage you, if you want to trade live with Trendy John and I every day, uh, you can join us in the trendy room here at Simpler Trading. We do have a 30-day trial for only $7. So if you haven't checked us out, come check us out, hang out for 30 days, and just see if what we teach resonates with you. Also, I just started a new YouTube channel. The name of my channel is Price Plan Profit because I concentrate on price action. I always have a plan before I enter the trade, and the profits come after you have learned to be structured and disciplined. All right, so check out my YouTube channel if you haven't gotten a chance yet. I load several videos every week and would love to hang out with you there. And yeah, you can always comment on any of my videos. I answer them all myself. I hope y'all have a wonderful day, and I will see you in the next live.